One of the biggest issues and struggles lots of traders struggle with is blowing their accounts, and not just one time or two times, multiple times. So whether it is your personal or a prop firm account that you actually have, let's talk about today, like what is the fastest way to actually blow that account and how to prevent from doing so. So first and foremost, what I can clearly say, just based on experience and talking to other traders over the years, is the fact is that many people who trade futures, forex, options, doesn't really matter, they end up blowing their accounts time and time again because they get stuck in the mode of revenge trading. All right, you lose money, and that's the thing when it comes to trading that we are trying to do is make money on a daily basis. Yes, it's probably the fastest way to actually make money in real life is trading, but you have to understand the correct and proper way to go about doing so that you can be consistent and profitable on a daily basis. Okay, all right, and I talk about that here on this channel. For one, ways to actually preserve your capital, prevent yourself from losing your money and blowing that account. I'm not saying that you're not going to have a small loss here and there, but I even show within the strategy and how I trade how to execute and get out of a trade or exit a trade quick enough so that you're not blowing that account. Some people get into a trade and they'll fund an account, and first time round they'll allow themselves to take on drawdown with hopes that the market's going to turn back around. How many of you out there that actually happens to you? Once you're into a trade and then you start seeing the market come back against you, instead of closing the trade at break even or getting out ahead of time before it hits your stop loss full on, you will sit there and allow yourself to be in so much drawdown and watch your account size dwindle down to where now you've gotten below the threshold for where you can't even place another trade going forward. Stop doing that. Whether you have a small account or a large size account, you have to know, have parameters set up for yourself, have measurements set up for yourself, meaning know what is going to be your threshold as far as the pain you're going to take. Okay, you have to limit that. You cannot stick into a trade. If you end up taking a loss in a small, that's fine. Of course, it's not good to lose money, but it's better to get out ahead than dig the hole deeper, right? So do yourself that favor, okay? Revenge trading is what I want to talk about today because it is a cycle that lots of traders tend to not being able to get out of. They have or get stuck in a mode to where they get in one trade, it doesn't work out. They take another trade, it works out. They get into another trade at that point there, instead of maybe just calling it quits for that day. So your first trade was a loss, second trade you won, you had a break-even day. Let's say it like that. But then they keep going and attacking the markets or staying in the markets after that second trade. They get a little bit confident, feeling like they can take another trade and be profitable. Do you not know that the more you stay into the markets, the more trades that you actually place, you end up getting into the psychological cycle to where it's never ending. All right, you have to follow a plan of action that you can put in place for yourself. That's your trading plan. Limit the number of trades you're going to take, and you'll see your trading and time get better. Because you're going to stop at 1 or you're going to stop at 2. Have a 1 or 2, limit as far as, when you're going to actually stop. If you're profitable in the first trade, be done. If you take your first loss, then maybe be done. Minimize the number of trades, and that's going to help you become more of a consistent and profitable trader. For me, I talk about 2 trades at a max now, okay? My first trade, if I'm profitable, I am absolutely done for the trading that day. Okay, because I'm not looking, I'm not greedy. I don't have to be in the markets and be trying to, make thousands upon $1,000 a day. That comes in time as your account size grows and compounds. Just think of it like this. Why continue taking 4, 5, and 6 setups, getting into the market with multiple contracts, and then it's like all you're doing is waiting on your psychology. You're up, you're down, you're up, you're down, and it starts to mess with your psyche, your mind, and you start to feel bad about things. Okay, you lose money, you make money. You're just in a vicious cycle to where you're not getting ahead. You can't seem to get ahead. Okay, your head is barely above the water to where you can get a breath or two of air. All right, The best way to do it to attack trading is to limit the number of trades that you're actually taking and stop revenge trading. The cycle of losing and winning. Break yourself free of that. If you take a loss, be done for the day. All right, because you save the money that you still have in your account to be able to trade the next day and the next day and the next day. If you win, be done. At the end of the week, if you follow a plan like that and you are executing and taking high probability setups, the trade works out in your favor. Close your account, close your charts, and then the next day, let's say you end up taking a loss, but you have minimized using proper risk management your loss. Guess what? You still could be up on the week. All right. So just say it's 5 days a week. And let's say you trade 5 days a week. Maybe a max of 10 trades a week. That's taking 2 trades a day. Or maybe a max of just taking 5 trades a week. If you do this and you're waiting patiently on the right setups, you're going, instead of taking setup at the setup, you're going to end up seeing your account size compound and grow over time. If you know when to cut the trade, if the loss, if you start to incur a loss, cut it at break even, okay, to prevent it from actually hitting your stop. Or even if you take a small loss before it even hits your stop, guess what? Tomorrow's another day, and you can make that little small difference up in the next profitable trade that you take and win big. All right. And I talk about if you're trading multiple contracts, whether it is the micros or the full-on E-minis, then there's ways and strategies and tips of what I talk about. If you're trading, say, for example, a risk reward of a 1-to-1 or 1-to-2. Let's say it's 1-to-1. Getting out most of your contracts at that 50% area between, at your 1-to-1 mark. So if you're halfway in between the market hitting your 1-to-1, okay, all right, then maybe take most off and then allow that last contract to run to the 1-to-1. Or, again, take most off at a 1-to-1, all off at the 1-to-1, and then allow to maximize on profits the last contract. You can play, you can strategically make plays like that. But the biggest thing is eliminating the drawdown. Okay, cutting the trade early at break even or shortly below that to get out. Now, if you want to wait for it to see if it's going to hit your stop, then that's on you. Okay, the stop loss is there for a reason. All right, we have to put those type of parameters in place to protect the capital just as well. But if the market does hit your full on stop, all right, tomorrow is another day. You still preserve capital, and then you can still look to make up the difference of what you lost and try to going forward. Have a higher end up at the end of the week to where you are profiting. All right. And I said this before, get caught up about win rates. I'd rather have like a 2-0, a 3-0 win rate, a 4-0 win rate for the week, or, a 3-1, whatever it may be. There are plenty of times where you're going to find out that sometimes, even though you may have taken 2 losses and just 1 win for the week, or 3 losses and just 1 win for the week, it all boils down to how you're actually managing your trade. Because that one profitable trade that you end up winning for the week may have outdone, okay, because maybe you have maximized and picked up a 1-to-3 or 1-to-4. It may have outweighed the small losses that you made. So you had more losses than you actually than winners. But guess what? That one trade may have ended up making you enough money in profit for the whole week in comparison to the couple losses that you had. So that's why I don't put a lot of emphasis on win rates and things like that. I'm looking at how I can maximize on the profits. I'm looking at if I'm got that one first trade and I'm done for the day. Okay, simple like that. Managing my trade so that if it doesn't feel right and it don't feel right and the market starts to come back, first close of a candle, second close, then go ahead and try to get out. Try to get out at the best point, especially if you got a small account at break even. Or before it actually maybe hits your stops, to kind of preserve your capital a little more, But first and foremost, you have to also understand how much money are you risking per trade, all right? And different people probably would say different things. I have a rule, maybe 5 to 7% max as far as how much, what the risk should be, okay? So if you're trading with a very small account, regardless of this account size, you should probably only be risking about 5 to 7%. I'm not here to tell anyone, you do what you want to do. I'm just simply saying, if you're doing more than 10% on a trade, that means you're risking 10% of your account per trade. that's a little deep. I mean, a little steep there as far as how much you're actually risking, because if you're doing that with a small size account, you're going to blow that account real quick if you do not know what you're doing correctly and how to manage a trade. So, the cycle of revenge trading, please try to break yourself free of that. It is a psychological barrier that a lot of traders face on a daily basis, and that's why you hear so many people saying, "I blew my account today. I blew it. I blew on 5 accounts." You're going to keep doing so if you do not break yourself free of that and start limiting the number of trades that you're actually taking, because all you're doing is you're putting yourself in that vicious cycle over and over. You're up, you're down, you're up, you're down. But your losses are bigger than your wins, and now you start to see your account size dwindle down, and eventually you're going to blow the account. And then you go back to replenish an account again, and then it happens again. So first and foremost is what I can say is limit the number of trades you take. Be very strict and have limitations to when to get out of it, or where to enter a trade at, but knowing just as where to exit the trade to protect your capital, preserve it just as well, so that you can trade tomorrow. All right. And again, I always say that if you are on a daily basis coming to your charts and you're just not right in the right mindset, don't trade. Okay, because then you're forcing things. All right. Don't ever feel like you have to force something, like coming to the table or to the charts and say, I've got to make $1,000 a day. I've got to pay the mortgage. Hey, you may dig a bigger hole for yourself by doing so. You have to come here with a clean conscience and a clear mind to be able to trade correctly, because you got to be able to understand what's going on. Like right now, I'm looking at the market right now, and we're setting up to move sideways. We broke we broke these highs right here, so we broke structure, but now we're just pulling back. There were some key areas. This was a demand area right here, and the market broke through it. But there was also one below, and as we can see, it bounced around about 6 o'clock or 5:40 or whatever it was this morning. Beautiful time during the London session to have taken that trade. All right. So, and right now we're kind of in between this high and this low here. We're kind of moving sideways. Yeah, we broke a bit of structure here to the upside. There was a play, or there could have been a opportunity to maybe go long in this area here. But you got to be able to see these areas in which the market is breaking structure. In this case here, to the upside, and like a game of chess, strategically mapping out the zones to actually trade from. This right here into the Asian session again. I don't highly recommend trading during the Asian session, especially the indices. All right. I mean, I'm guilty of it. I've done it in the past. Okay. But you'll learn that there's not a lot of volume that sticks behind when it comes to trading the indices or equities during the Asian session. The best opportunities come about during the London and the New York session when it comes to the indices. Now, some, like gold and some of the other commodities, maybe so during the Asian session, but indices, London, and the New York session, I'll leave it like that. But right now, it looks like we're setting ourselves up to kind of, we're moving sideways here. So be careful, because it looks like we could start ranging, and those are the times where a lot of people start blowing their accounts because they're in and out of trades, and they're not clearly waiting for good signals or setups to actually unfold and take place. Looking for structure breaks. Number one thing I want to see and identify before I start marking up my zones is, did the market take out any area of structure and leaving behind either a demand or a supply area? That's what I'm looking for. Was there a decent and a nice structure break in which that would entice me to start marking my higher base chart, my 120? Okay, so that's what I look for. So if I'm looking, for example, here where we started breaking structure, we had a high, low, took out the high here, structure break, higher low, took out the high here, structure break. We broke here, came back. This was a high probability demand zone. This was a high probability demand zone. And either one, the market can react at, because we broke this area of structure. You may have multiple areas of demand and supply after which were created when the market broke structure and the market left behind. You just have to wait till the market gets back there and then start moving down to a lower base charts. For anyone watching for the first time, I talk about the strategy heavily in just about every video here on the channel. And the purpose and reason why is because I want to see people become successful, and I break it down. Okay, there's a reason why I do. Now, for all those that are part of the elite membership community, which is a private community for those that are interested in the trade breakdowns, where I've got a ton of trade breakdowns where I go into detail about actual setups. That's key, because you must understand what, if you're looking to take interest in the strategy and how I trade, it's all based on confluence and using chart confluence, higher base, lower base charts. All right, and looking for setups. You may want to take interest in becoming an elite member. The link to become an elite member is only $6.99 a month. But what you receive are all the trade breakdown videos I've ever created, okay, and posted. Lots of those trades that I take over on Discord, I break them down to the private community. You also receive the video playlist as well as a great video I did covering market structure, because market structure is the binding glue to all of this. You must understand what's going on when it comes to the movement of the market. If we are bullish on a higher stance, a higher chart, then be looking for opportunities to go long. Bearish, looking for opportunities to go short. So those are the things that I cover in that video that's made accessible to the private community. So if you're interested in becoming an elite member, the link is down in the description portion of the video, right below the Discord link. It says become an elite member. Click on it. 2 tiers will pop up. Make sure you choose the one for, it's only $6.99, but you get so much valuable video content that walks you through these trade setups, and I'll walk you through them as if you're sitting right next to me. So it's kind of like you're getting, one-on-one sessions, and it's, for a very, very inexpensive fee. I mean, it's not really, we're talking about $7, for a whole month's worth. So anyways, and I continue making video content like that. I need to make a video and post it, an updated video, and post another trade breakdown video. I haven't done that in a little bit, but maybe hopefully I get time. I'll be able to do that soon. So anyways, I just want to talk with you guys today, kind of, again, one-on-one, and letting you know, if you are in this vicious cycle of revenge trading and you continuously blowing your trading account, and lots of people do this on just in the first day one, they blow their accounts after funding them, or even trying to pass these evaluations. A lot of people, they'll pass a challenge, they'll get the account, and then they'll blow it in the first day. Okay, because you've got to understand and wait patiently. Stop taking everything. Maybe you passed it just based on pure luck. So you've got to really hone in on the skill set and understanding a strategy, regardless of the strategy, and perfecting that strategy before you start wanting to place funds into an account. That's why you have demo and simulation. Okay, you can back test and forward test effectively to see how a strategy is going to work out. But I just want to share that with you guys today. Hopefully you understand where I'm coming from. I'm sure a lot of you probably have, just about every trader has experienced revenge trading. And if that is you, leave a comment down below. If you're still going through that cycle of up and down wins and losses, please leave a comment down below. Say, I'm still in that cycle of revenge trading. I cannot seem to break that. Just leave a comment down below. I'm guilty of it. Say, hey, I'm guilty. I am trying to figure that piece out, because we all at some point were. All right. Even when I first started, everything looks appetizing, but the more that you start to be able to become experienced in understanding how to read your charts, you'll become more selective on your trade, the opportunities and what you see on the charts that make more sense, all surrounding market structure. Allow market structure to be your guiding piece of education that is going to help you filter out which areas, which zones to trade from. We're talking about supply and demand. All right. But that's all I want to do is share that with you guys today. I hope everyone had a successful and, trading day today. Please don't get caught up in this sideways movement right now, trying to trade within this little bit of price action going on right now. Be very careful and selective just as well. So I'm sitting out and just watching, opportunities as they unfold. And some days, there may not be a trading day. You may miss a good opportunity and just leave it alone. Wait for the next day. Don't force the trade. Okay. But yeah, if you found value in today's video, like I always say, please first and foremost, subscribe to the channel by clicking the subscribe button. Make sure to turn on your post notifications. And last but not least, again, if you found value, please click that thumbs up button, that like button. Today, I'm just sharing some information because I know there are people out here that are suffering from revenge trading, and they are quickly blowing their trading accounts. All right. And that's probably something that you are dealing with and trying to figure out, how do I stop this? I just can't seem to let go of this whole revenge trading mindset. Okay. That's all I have, guys. See you in the next one.